Chapter 4: The History of Taxes and the Power of Corporations. The Great Illusion. It's just about how much you make. For generations, the promise has been simple. Work hard, earn a good salary, and you will be rewarded with financial security. This is the grand narrative sold to the masses. But it is a narrative with a critical hidden flaw. It ignores the silent partner who claims the first and largest share of your labor, the government, through taxation. This chapter is not a political treatise. It is a lesson in financial reality. Wealth is not measured by the gross number on your paycheck, but by the net cash flow that remains in your control after every entity has taken its share. The rich understand this at a molecular level. They have decoded the system. They do not merely accept the rules, they study the rulebook, learn its loopholes, and structure their lives to play a completely different game. The game board is the cash flow quadrant, and the most powerful piece on that board is the corporation. A brief history of the tax trap. To see the present clearly, we must look to the past. Rich Dad painted a vivid picture. Phase 1. Taxing the other. In its infancy, the income tax in places like England and post-Constitution America was sold as a patriotic duty of the wealthy. It targeted landowners and the privileged to fund national endeavors, primarily wars. The middle and poor classes largely supported it. It was a tax on someone else's castle. Phase 2. The creeping net. As governments expanded their scope and appetite, a simple, seductive logic took hold. Why stop at the rich? The definition of income broadened. Tax brackets slid down the socioeconomic scale. What began as a 1% levy on the top tier quietly transformed into a complex web affecting every wage earner. Phase 3. The psychological triumph. The greatest triumph of the system was making it seem inevitable and morally correct. Paying your fair share became intertwined with civic virtue. The conversation shifted from, is this system efficient or just, to how can I minimize my withholdings? The architecture of the cage was accepted as part of the landscape. The poor and middle class, Rich Dad said, fought for the right to be taxed. They celebrated when the government took from the rich, not realizing they were building the very mechanism that would one day bind their own children. The cash flow quadrant. Your identity dictates your tax fate. Your financial destiny is largely determined by which quadrant you generate your income from. E, employee. You have a job. You trade time for money. Your tax situation is brutally simple. You earn, you're taxed, then you spend. Your income is taxed at the highest rates, ordinary income tax, and it is taken right off the top, often before you even see it, withholdings. Your primary deduction is a mortgage, a reward for taking on massive debt. You're playing financial checkers. S, self-employed, small business owner. You own a job. You are the sole practitioner, the specialist, the freelance expert. You might make more, but you pay the same high earned income tax rates. You have a few more deductions, but you pay for them with immense risk, longer hours, and total personal liability. If you are sued, everything you own is at stake. You are playing chess, but with only your pawns. B, big business owner, and I, investor. This is where the game changes. These quadrants generate passive and portfolio income, but their real secret is their vehicle, the corporate structure. A corporation is not just a big building with a logo. It is a legal person created by the state. This person can sue, be sued, earn money, and pay taxes all separately from you, the individual. This is not a loophole. It is the intended design of the system, created to encourage capital formation, entrepreneurship, and investment. The revolutionary difference in cash flow. For the E/S, the left side, income, taxed, highest rate, equals expenses, equals disposable income. You fight to live on what's left after the powerful take their share first. For the B/I, the right side, income, expenses, business deductions, reduced tax, lower corporate rate equals reinvestable profit. You use pre-tax dollars to build your empire, pay taxes on the remainder, and shield your wealth. The dual power of the corporate structure. The shield, asset protection. When you operate as an E or S, you are your business. A lawsuit against you threatens your home, your car, your savings. When you operate through a corporation or an LLC, limited liability company, the legal liability is generally contained within the entity. Your personal castle is guarded by a moat. The rich don't just own assets, they own them inside protective legal structures. The sword, tax optimization. The tax code is in effect a series of incentives. Governments want businesses to hire people. Salaries are deductible. Buy equipment. Depreciation is deductible. Invest in research, R&D is deductible. Provide health benefits, deductible. Reinvest profits, often taxed at lower rates. The rich use their corporate sword to legally channel money into these incentivized activities. They buy the car through the business. They attend the conference as a business expense. They build their investment portfolio with pre-tax or deferred dollars. Their wealth-building tools are purchased at a 20 to 40% discount compared to the employee who must buy everything with after-tax dollars. The core instruction. Build your ark before the rain. The mantra of this chapter is, don't work for the system. Make the system work for you. Your action plan is not about becoming a tax evader. It's about becoming a tax strategist. Immediately shift your identity. Stop saying, I have a job. Start saying, I run a personal corporation that currently contracts its services to one major client, your employer. This mental shift is fundamental. Legitimize your side hustle. That rental property, don't just own it in an LLC. That freelance work, invoice from your corporation. The moment you have a single stream of income outside your W-2 job, it must be housed in a proper entity. The cost is minimal, the protection and advantage are monumental. Master the vocabulary of deductions. You don't need an accounting degree, but you must understand core concepts: depreciation, the phantom expense that shelters real estate income, retirement plans, SEP IRAs, solo 401ks that allow you to shelter 5 to 10 times more than a standard employee 401k, and ordinary versus capital gains taxes. This knowledge allows you to direct your professional team, your accountant, your lawyer, effectively. Use debt wisely as a corporation. Remember, good debt is debt used to acquire cash-flowing assets. A corporation can take on debt to acquire a business or property. The interest on that debt is often deductible, and the income it generates is sheltered. This is leverage on steroids, used within a protective shell. The ultimate realization: freedom through structure. Financial intelligence, Rich Dad concluded, is not merely arithmetic, it is legal, corporate, and tax intelligence. The history of taxes is a story of how the masses were gradually enlisted to fund the state. The power of the corporation is the story of how the informed can use the state's own machinery to build and protect private wealth. Your goal is not to hate the game, but to learn its deepest rules. Move your cash flow from the left side of the quadrant, where you are a taxed commodity, to the right side, where you are a taxed advantage owner and investor. Build your corporate arc not as an act of greed, but an act of responsibility to your future, your family's security, and your freedom. The reign of taxes, liabilities, and economic cycles will always come. The rich don't just hope for sun, they build arcs. It's time you built yours.